Okay. So we got a few people joining in, and actually our attendance just dropped to 1. Now it was at 10. We'll let people start joining back in, hopefully. There they come. All right, so people are going to start joining now. In this way, they'll see that we're actually here. Yeah, they're starting to join in now. Welcome, everyone. I recognize a few names in there. Daniela, it's good to see that you're here. Dennis, great to have you here. As everyone starts logging in, I'll say this more than once, but I'll go ahead and let everyone know we do use Zoom webinars, not Zoom meetings for these. And so you will be able to see the presenters, but they will not be able to see you. It allows for a better share screen experience, and also we kind of do it in order to be able to get the reporting we need for the state in order to offer the CE credit. It works better this way. But yeah, welcome everyone. And we'll give it a few more minutes till the top of the hour, and then we'll kick things off. So this is when it's the awkward time when we're just waiting. So Jolene, good to have you here. Karen, great to have you here. Appreciate everyone taking time out of a beautiful day in Central Oregon. I'm not there actually at the moment. I'm on the road in one of our other offices, but here it's a very nice day there today. Just a little bit longer. Sure, we're not having issues. No. Okay. Well, we're right at the top of the hour, 10 o'clock. We've still got people joining. But again, I'll just repeat for those who have just recently started signing in. At Deschutes, we like to use Zoom webinars. The reason we use Zoom webinars, one is for reporting reasons for the state, but also it allows for you to see our panelists, but the panelists won't be able to see you. A little less distraction on the share screen and everything else that way. You will be able to interact with the panelists, so feel free to use the chat feature, raise hand. You'll be able to see those in the control panels. Usually, most of the time, it's at the bottom of your screen. You'll see a raise hand feature. If you raise your hand, it notifies me. I'll be able to interrupt the speaker and let them know that you have a question, and then I can ask you to unmute. And then you can actually verbally ask the question, or you can use the chat feature, or you can use the Q&A feature and just type something into either of those. And again, I'll be watching those to help the speakers answer any questions you guys might have. With that, introduce myself. I am Kevin White. I'm the state manager for Deschutes Title. We started off as Deschutes County Title, expanded into just outside the Portland area into Columbia County about 3 years ago, and looking to continue to expand. But Deschutes Title is one of your probably the last stronghold actually in Central Oregon as a local family-owned company. Everybody else has gone to a large national, and so we're still your local family-owned operation. And so if you support local, we appreciate that and appreciate you supporting us at Deschutes Title. We are going to be kicking off today with a panel on the state of our economy, basically both in Oregon regionally, and then we're going to have an overview of from EDCO in terms of what's happening more regionally, and then we're going to end with a look at what's happening in Redmond through Redmond Economic Development there. So our speakers today is Jake Procino, and Jake is an analyst and economist at the Oregon Employment Department. We also have John Stark on the panel today. He's the CEO of EDCO, Economic Development of Central Oregon. And then we have Steve Curley, the executive director of REDI, Redmond Economic Development. So welcome everyone, and we're going to go ahead and kick off, and I'll go ahead and turn this over to Jake. So Jake, if you want to take it from here.
Hi, yes, thank you for having me. I am hopefully sharing my screen.
You are.
Awesome.
Looks
Wonderful. Yeah, so my name is Jake. I am an economist with the Oregon Employment Department, but I usually regionally serve Multnomah County and Portland, but I am also covering for Central Oregon because we currently don't have an economist serving Central Oregon in this capacity. So here to talk about it. I did actually cover this position before, so I'm not just an outsider covering Central Oregon. I did live in Bend for some time. So, yeah. Anyway, so I'm just going to talk briefly, just an overview of Oregon state and local economic trends. There's a lot of crossover because there's a lot of data that's only available at the state level, just due to sample sizes. But largely, Central Oregon, a little bit of an outlier in some of this, but largely follows the same trend. So talk a little bit about the economy very broadly, and then talk about the labor economy, and then I'll talk about tariffs. I have about, I think, 15 minutes, so it's not going to be super in-depth, but hopefully you learned something. So first, I just want to say, if you are ever asked to participate in a Bureau of Labor Statistics or a census survey, either personally or professionally, we ask that you fill it out because most of the data that I'm about to show you comes from surveys like that. Okay, so first I just want to talk about broad economic trends in Central Oregon and Oregon. As I mentioned earlier, first we're just going to look at total employment. So this graph here it shows normalized total non-farm employment. So non-farm employment is just all payroll jobs that we see in a region, whether US or Oregon or the Bent MSA. And then normalized just means we're benchmarking it to a certain period of time. So we're looking at the change. So basically what we're looking at here is the change in employment from January 2020, just as a sort of benchmark. So we can see that the Bend MSA, which here, the definition actually recently changed. The Bend MSA now is a tri-county area. It includes Crook County, Deschutes County, and Jefferson County. So it's a 3-county area. And we can see that the Bend MSA region, the Central Oregon tri-county area, has grown much, much faster over the past 5 years than Oregon or the US. You can see Oregon as a whole has lagged. It's only about 2% above employment as it was in January 2020, which is lagging far beyond US trends. And so in the US has grown about 5%. It has about 5% more jobs in the economy as of April 2025 than it did in January 2020. So despite Oregon largely slowing, and that's a large part of that is because of the Portland economy not, being quite sluggish. Despite Oregon on the whole being a little sluggish compared to the US, the Central Oregon economy has grown tremendously fast. There are a lot of reasons for this. A lot of it, a big chunk of it is due to growth in population. Central Oregon was one of the Zoom towns. They saw a lot of people migrating to the area, a lot of people migrating to Bend, which increased housing prices in Bend and thus moved a lot. And then a lot of people who couldn't afford Bend anymore or wanted to move to Central Oregon but wanted a somewhat cheaper location either moved to places like Prineville or Lapine or Sun River or Redmond or Terrebonne or Madras even. And so that population increase factored in a lot. It factored into a lot of employment demand, along with other booming industry, the tourism industry, and other manufacturing industries in the Bend MSA. So, kind of a long-running view over the past 5 years, looking just this graph looks at the change in employment by industry in Central Oregon. So this is looking at year-over-year job change from April 2024 to April 2025. The bar graphs, the lengths are determined by the percentage change year over year, and then on the label is the amount of job change. So you can see that even that manufacturing had the highest job growth, almost 6% job growth year over year, but it did not have the most job growth. That industry would be the private education and health services. So in Central Oregon, manufacturing and private education and health service were the two fastest growing, both by percentage and by the fastest growing industries, both by percentage and absolute level. The private education one is, or sorry, the private education health services, the job growth there is mostly contained within health services. Both in Oregon and the US at large, and in Central Oregon, we've seen the population just get older. There's a lot of, we've seen significant aging in the population. And with this, there is a much higher demand for long-term and in-home care professionals. So that has largely been growing the economy statewide. Is just there has been so much demand for these long-term care and in-home healthcare professionals. On the other side of things, the information, a relatively small sector, so information's like news stations and paper and newspapers, and some other information like some software companies are categorized within the information industry. One of the biggest losers by percentage, but it's a relatively small industry, so only 70 job loss, or only estimated loss in 70 positions in total. And then trade, transportation, and utilities was the other big industry job loser in Central Oregon, and largely across Oregon as well. These trade, transportation, and utilities, a lot of them are like trucking jobs or Amazon like delivery type jobs, or retail trade type jobs. So retail would be like box stores and stuff. One interesting note that may or may not catch your eye given the news we've heard over the last year, or news we heard earlier this year, is that you might see government and see, oh, you heard a bunch of government layoffs, and you see that government jobs have grown year over year. In part, that is due to just local education and growing of unfilled positions in local government and such. But a lot of federal layoffs aren't reflected in that number. And the reason is because a lot of the federal, job layoffs and restructuring, the people who lost or people who were laid off or fired, they were offered buyouts. So with your buyout, they're technically on payroll until, it depends on the department or agency, but a lot of them remain on payroll until next January. So we won't know the full extent of these governmental job losses, which have affected significantly federal jobs and state jobs, which play a larger portion of all of the employment economy in Eastern Oregon. We won't see them until quite a few months down the line. So that's just a very, very broad, just looking at employment in Central Oregon. Next, I just want to touch on the labor market. So the labor market is labor demand versus labor availability. So the two most shorthands for labor demand and labor ability is labor demand is the amount of hiring or job vacancies. So, companies look to hire, and the amount of labor availability is people looking to be hired. So this could be recent college grads, this could be unemployed folks, and such and such. So just broadly looking at the hiring level across Oregon, and largely the same remains true in Central Oregon, though to a lesser extent, as hiring has been decently high in Central Oregon. We've seen hiring fall quite a bit year over year. So this is just annual hiring level in Oregon in thousands. So the 1,054 in 2022, which was, I think, the highest hiring level ever in Oregon. That's the equivalent of 1 million job hires. So it was really high in 2021 and 2022 across Oregon due to recovering from the pandemic recession. But we've seen job demand really slow back to 2017, 2016, 2017 levels in 2024, with demand dropping a little over 10% in hiring level. Now, if we look we look at this chart's a little complicated. This chart shows different things, but is showing relative labor demand and labor availability. So this graph, literally, it's a labor leverage ratio. It shows the number of quits per discharge or layoff. So it's the number of people quitting their job, a ratio of the number of people quitting their job per basically firing. So this relationship, this labor leverage ratio, this relationship between quits and layoffs is a proxy for how confident each side of the labor market is. So if you have higher quits, that means employees are feeling more confident in the labor market. And if you have higher layoffs and discharges, it tends to be employers can tend to, it tends to indicate, or sorry, if layoffs and discharges are low, that means it tends to indicate that employers aren't confident in their ability to hire. So in Oregon and in Central Oregon as well, we saw a very, very high labor leverage ratio, which indicates high employee confidence, right? There were a lot of quits, as you might have heard of the Great Resignation, and not a lot of layoffs and discharges. There was a lot of quits because employees were confident that they could find a different, higher paying or better job. And there was not a lot of layoffs and discharges because there was a sort of labor retention because it was very difficult to hire for certain companies during that time period. We're seeing that, so you can see the labor leverage ratio was pretty high, 2.9 and 3 in 2021 and 2022. However, that dropped precipitously now in 2024. Quits have significantly declined, although it is back to 2016, 2017 levels. So it's not in the tank, say. And we've seen layoffs and discharges also increase, again, similar to 2017, 2018 pre-pandemic levels. So it's down to 1.9. So what we're seeing now broadly in Oregon is just a sort of return to normal. We're no longer to the higher leverage place, the very, very tight labor market that we saw in 2021 and 2022. And it's loosened quite a bit. Yeah. So that's what we saw in 2024, and we're continuing to see in 2025. So this is these last two slides show more or less the short-term labor market in Oregon. So it's just what's happening now and what's happening in recent history. Taking a longer look involves looking at demographics. So taking a longer look, what's the labor market availability going to look like in 10 years? How many workers are there going to be in 10 years? Or how many and how much job demand is there going to be in that period of time? Well, we don't really know how much job demand there is going to be necessarily, because looking 10 years out, it's hard to make concrete predictions. But we do know that on the labor availability side, it's going to be way more constrained in the long term. And this is because around 24% of the workforce, people in Bend, around 24% are 55 or older. In a different looking at this at a different way, we expect nearly 1 in 4 workers in the, and this is Central Oregon, and it's also the same in Oregon. We expect nearly 1 in 4 workers to possibly retire in the next 5 years. This is something that all sectors, all industries, and all employers are going to have to deal with. It is there are going to be a lot of retirements across the board. So either companies are going to have to figure out how to hire more people, or they're going to have to figure out how to be more efficient with each position. Now, in Oregon, this is more. It's interesting to talk about this at a state level versus Central Oregon level, because most of the time in Oregon, from 2010 to 2020, Oregon as a whole saw huge in-migration. We saw immigration immigration across the board. So despite the fact, the birth rate has declined, and the aging of the workforce, there's a lot of people exiting the workforce, Oregon was able to bring in a lot of people from other states and internationally to fill job demand. Now, over the past, since 2020 onwards, Oregon has seen stagnant, if not negative, migration growth, or migration population growth. So we're still having the same problems of a declining birth rate and a population aging out of the workforce, but Oregon as a whole is no longer seeing the high rates of in-migration to take the jobs available. Central Oregon has been a different story, as I'm sure you're aware. Central Oregon saw huge immigration continue even in 2021, 2020, 2022, 2023. Again, these huge boom towns. Now, 2024, a little bit of an anomaly. It's basically saying that the population, if you take 2023 and 2024 together, is basically saying that there's only about 1,000 people that came into Central Oregon from 2023 and 2024. It's a little bit weird to look at. But in either case, we saw huge immigration, net in-migration into Central Oregon, but it is going to slow down for various reasons. So Central Oregon, the problem has been delayed. Whether or not this huge net immigration can continue, I'm not sure. But it has definitely, Central Oregon specifically has not seen the problems that the state has with immigration. Okay, last topic. Excuse me. I want to briefly talk about tariffs on Oregon. It's been big in the news recently. In brief, so just talking about the tariff rates. The tariff rates announced, it changes day by day and week by week, and new tariffs are announced and then they're walked back. But if we're just looking as of May 5th, which is a month ago, if we're looking anywhere close to that level, the effective tariff rate of 28% is the highest it's been. Will mean that the U.S. is facing the highest tariff rate it's been since the turn of the 20th century, which is really high. And even when you start looking at pre and post substitution rates for tariffs, which is basically meaning instead of looking, which means instead of someone buying a banana imported, which with a tariff rate, they substitute it with, say, a domestically produced apple. Sorry, excuse me. Which means they're buying less tariffed goods, or taxed imported goods, and they're replacing them with non-taxed goods. It's still generationally high. Trump announced tariff. If you remember, in 2018, Trump announced tariffs, but as you can see in this little graph, it is relatively tiny blip compared to the generationally high tariffs that have been announced. And this is big news for Oregon because Oregon is a big exporter state. If you look at exports as shares gross domestic product in 2024, Oregon is the 6th highest in terms of total share of gross domestic product, as well as exports to China. So Oregon is hugely impacted by this. Central Oregon, a little less so. Oregon, just looking at Echo Northwest did a trade impact. They were looking at the number of direct, indirect, and induced jobs supported by international trade by county. On the whole, about 13% of Oregon jobs are trade related, which is a pretty high level. And relatively speaking, the 3 Oregon counties are less so, 8%, 9%, and 8% again for Crook, Deschutes, and Jefferson, though this is still relatively high if you compare it to the US as a whole. So Central Oregon may tend to be affected less, but it is still trade impacts will have a huge impact on the economy. Or not a huge impact. It will have an impact. So again, I mentioned the trade war in 2018, which you can see resulted in a decline in GDP, both in the US and Oregon, but the effect on Oregon was higher than the US. And so again, with the tariffs that were announced being higher than they were in 2018, we can expect, it will have probably a similar, if not bigger, effect on the Oregon economy. So that's all I got for now. If you have any questions, please feel free to ask them now. If you can't get your question in now, you can feel free to message or email me later if I can figure out how to put my email in the chat. And I also send out a monthly newsletter about the economy, both in for Central Oregon. So if you would like to get signed up for that, you can just email me and we'll get you signed up. So thank you.
Thank you, Jake. I'll just check real quick, see if there's any immediate questions on that, and if not, we'll hold till the end for any other questions. But I don't currently see any hand raises or chats or questions in the Q&A portal. So thank you again, Jake. That was a great overview, very insightful. Appreciate that. With that, John is going to show us a little bit more about what's happening here in the region in Central Oregon more directly. So I'll turn it over to John, and excited to hear seeing some of the numbers Jake showed early on. It's obvious John and Steve are working hard for our region in terms of bringing jobs into the area. So with that, John, I'll turn it over to you.
Thank you very much. Just want to check in. Can you see my presentation screen?
Yes.
Terrific. Well, welcome everybody. Thanks for the opportunity today. I've got a lot more slides, but we'll have more of a story narrative here, not spend as much time on each slide. So we're going to talk a little bit about the regional economy. Some of these slides were generated, frankly, by Jake. So I'm going to unpack this as a comparison to other parts of the state related to our region. So most of you know, EDCO helps traded sector companies move, start, and grow. We're focused on industry in these 5 sectors, predominantly management of companies or administrative centers, high tech, which include data centers, hardware, software, and semiconductor companies, lifestyle products such as outdoor gear and apparel, food processing, brewing, distilling, and beverage manufacturing, advanced manufacturing, which is both wood products, aviation, aerospace, and metallurgical type manufacturing, and then scientific, bioscience, medical device, and nutraceuticals. So those are the companies that we're targeting for our area, and they're a good fit for each of the communities that we serve. And most of you know we're a hub and spoke model. We've got 14 people that work for us, 15 in total with a contractor down in La Pine, helping to serve that traded sector industry. Jumping to employment, how do we stack up? So Jake talked about the significant growth in employment in Central Oregon. To the right is by county, to the left is by MSA. Suffice to say, Bend continues to be either number 1 or 2 year-over-year job growth at about 2.5% this last 12 months. And this last April here, we were leading the state again in overall job growth. This was unpacked a bit by Jake as well. Suffice to say, not all of the counties are trending exactly the same. Some of the government job losses were offset by gains in other communities. Again, he mentioned education, but we did see some losses due to some federal layoffs that occurred, particularly in Prineville, related to the Forest Service. But suffice to say, Deschutes County is really accelerating in terms of job gains for total non-farm employment, and so is Jefferson. So we stack up really well again across the state. Taking a look at GDP, Jake and I participated on some research here that came available late December related to the last 5 years GDP growth, 2019 to 2023, where Crook County led GDP growth by nearly 5 times the national average and 4.5 times the state, 52.5% GDP growth. And the only county that had positive GDP growth in 2020. And so Deschutes is trending very, very well as well. But as a region, we're at about a 21% GDP growth over that period. So definitely we're a horsepower when you consider job growth and GDP growth. What does the forecast say? These are some slides that I pulled together from Carl Riccadonna, who is our new state economist. He does the forecast. These are available in his forecast for the state budget. These are GDP forecasts from a number of different folks that look at it, the Federal Reserve, a private sector survey by Bloomberg, and the S&P forecast. This is on the right-hand side there, where they're anticipating, fourth quarter ending the year with a limited or shrinking GDP growth. But looking into 2026, we start to see some increases in that GDP growth looking forward. That said, Carl also did some predictions related to the possibility of a recession. He came out at about a 25% recession prediction, and that was largely due to some of the uncertainty around tariffs and other federal policy changes and so forth. So they are anticipating a slowing economy for sure, and Oregon, according to Riccadonna, is expected to see an even slower GDP growth than the rest of the country, largely because of what Jake said. We're very trade dependent, so these tariffs do have an impact more on Oregon than other states. He had a slide on that. That said, manufacturing, as he had said, is growing. Hours worked by manufacturers in Oregon is up. That's a good thing. Why? Because they're traded sector companies, and those traded sector companies export their products either out of Oregon, out of Central Oregon, and they import wealth. And so that is money that's circulated then by secondary employers throughout the region and the state. Population growth, Jake touched on this as well. Cook County leads the state in population growth. Of the 30,000 people that moved to Oregon during this time period, about 13,000 of those moved to Central Oregon, or about a 43% of the state's total. So we lead the state in GDP as a region. We lead the state as a population growth. That said, there is some out-migration as well, people moving in and out. I've got some other slides, so I won't get time to get to today on where people are going. But the largest number of people moving into Deschutes County who then move out are moving out to Crook and Jefferson, for many of you know, in real estate for affordability reasons. And then some are moving back to areas of Multnomah, Clackamas, and Washington County, or back to Seattle where they came from. So there definitely is folks moving in and out. A slide I can cover in a future date. Let's get to a little bit of EDCO's work. So most of you know we're working to recruit companies in. These are leads year to date. So the data you're going to look at here is third quarter. We run on a fiscal year. So this is third quarter ending April 30th. So 3 quarters of the year completed. These are the number of leads. This is the work that we do to identify leads in the traded sector to bring new companies in through our digital marketing campaign, organic leads, and then our responses to Business Oregon Leads, who is another economic development state agency that helps us identify leads. So 100 leads or so that we've been processing that as we work with those become pending projects, which I'll get into a little bit more here in a second. Here's activity on the start side of things relative to creating a portfolio of companies that we serve. We have about 85 companies in our start portfolio. We have a venture catalyst that mentors these companies to help them scale and grow. We have about 52 investors engaged. Those folks typically either fund directly companies or help fund our Bend Venture Conference Fund. The goal is 40, and we're exceeding that goal today to help these early stage companies launch. And then additionally, through our portfolio, we've deployed both through the BBC Fund and other outside funding about $34 million to help these companies grow. 3 quarters of coaching sessions. Our goal is about 275 per year. We're just over 200, on track to meet our goal. And then the grow activity, these are, again, meetings to generate pipeline, companies we would help grow in the area. These are outreach visits. We typically meet with nearly 400 companies per year. We're on track to meet our goals for this year with 3/4 done. Again, meeting with companies, understanding what their challenges are, help them solve those with substantive solutions, but also helping them with things like site selection, real estate transactions, permits, and the like. And then system referrals, when those companies need help outside of EDCO, we refer those on sometimes to some of you folks that are on the phone, is also trending very well. Although we do anticipate that we may not meet goal on this, but our directors are working hard to make up some ground in that space. So pending projects, this is what's in our pipeline. What you're looking at here is graphs by community and the types of projects, move, start, grow. So right now, the startup activity is largely in Bend. Of those 85 companies in our portfolio, about 95% of them are in Bend, but there's 1 or 2 to up to 4 in each of the smaller communities as well. And then the move projects, there's some in each community as well as grow. But clearly Redmond leads the job opportunities, which Steve will talk about. He's got some pretty sizable projects in his pipeline. And then the investment is happening, the interested in investment. Again, these are companies that have said to us they want to do something with us in the next calendar year. And so right now, the larger investment opportunities are in Prineville and Jefferson County. That said, there's been some project announcements. Steve will talk a little bit more about this that still remain in this pipeline because we don't count it as a done deal until they're in the building. So for instance, the Amazon announcement, which Steve will probably talk a little bit more about, is still in this pipeline for Redmond for anticipated jobs. So again, those are coming. And then pending projects by industry. These are the Move, Start, Grow projects, what industries they are. I can't tell you who they are, but I can tell you what industry they come from, led by high tech, advanced manufacturing, and lifestyle products. There's some that are still kind of blank because they fit across multiple industries that will define more as they become real. But that the scientific industry, what used to be a larger part, is shrinking a bit. Most of that activity is happening in Bend. And then food and beverage production is still alive, although less alcohol driven today, more consumer goods, sodas, and other drinks that are non-alcoholic. So a lot of activity in that space as well. Then what's happened so far? Move projects are happening a lot slower than they used to. So the orange line is the goal. We've had less than 5 projects that have occurred, but we have had several that you can see logos there on the bottom right. We're not meeting our goals for the year, and that's largely due to the uncertainty in the economy, people's interest in investing, and frankly, people's interest in Oregon. And so we are seeing a slowdown, but I will say the pipeline is still rather robust. In the move category, that said, it's taking a lot longer to get a project done. So for instance, Amazon was about a 3-year project. So it just takes longer to develop a piece of property, get through permits, build the capital stack, labor costs are up, materials costs are up. And so it takes a lot longer to get a project done, which is translated also in our grow category. So, whoops, excuse me, I went to start. Let me go to grow and I'll come back to start. That's also translating into the grow category where we're just under 10 projects. We expect a strong 4th quarter. That said, we're only about halfway to our job creation goals and about 1/3 of the way to our capital investment goals. Again, companies are taking a lot longer to get projects done today. Going back to start, this is a new trend. Start is actually carrying a lot of weight in our job creation. These days, we're on track to meet our goal. In fact, exceed our goals in job creation. About 200 jobs have been created by companies we've served as a catalyst to these jobs. And a large percentage of those, 65 or so, have come from our start category. So moving on, we're also involved in a lot of table setting efforts. The state legislature has taken up a lot of time for us, but important work. We're involved in industrial land development, making sure we have a robust inventory for future projects. Air service development, Dallas-Fort Worth, we helped incentivize that and get PDX back. And of course, workforce development is a big part of our work too. Because of the trend in start, We are actually going to take the lead organization role in the Central Oregon Innovation Hub that stitches together our ecosystem that includes Cultivate Bend, Bend Outdoor Works, Oregon State Cascades, SBDC and Opportunity Knox, and others. It's a program that Business Oregon has a grant opportunity, which we've applied for to be that large lead organization, in which case we're hoping to capitalize on that trend where a lot of jobs are coming from start to shake more bushes, find more entrepreneurs, and get them into the ecosystem so we can help them scale and create even more jobs. I won't get too much in the weeds here. Here's our legislative agenda. On the left-hand side, right-hand side is some example bills. Red, those bills we've opposed. Green, those bills we're supporting. We're involved in that legislative work with several of our partners, including the Oregon Economic Development Association, where we have some opportunity to engage and influence statewide policy with this group of folks with our statewide Oregon Economic Development Association. And then I'll also mention that we still continue to lead several of the indices out there, whether it's the Brookings Institute, the Milken Institute, or Area Development. We're in the top 5 in a number of different areas, including number 4 for the Milken Institute's best performing cities. We were at number 1 4 years in a row. They added housing costs. We went to number 13, and then as others caught up in that housing costs, we went to number 8 and now number 4. So we continue to trend well on the indices. And then finally, when I send this presentation out, you'll have access to some of these data points through these links. And so Kevin can send this out, and you guys can take a look for your own or subscribe to those to get some of the data. That's all I've got. So I'll turn it over back to Steve and Kevin for the next part.
All right. Thank you, John. Really appreciate it. Appreciate all the work you guys do. So this is excellent. And next up will be Steve Curley to focus on Redmond. John alluded to some of the exciting news that's happening there. So we'll turn it over to Steve. I think we lost Steve for a second. Is Steve still here? There he is. Okay. We can't hear you, Steve. You're still muted. So, but we'll go ahead and turn it over to Steve to talk about.
There we go.
What's going on already? There you are. All right.
Sorry about that. Yeah, I should have clicked those buttons first, but
yeah. You're good to go.
All right. Thank you. I moved that out of the way. Great. Well, thank you all for being here. I am going to sort of take us home. You've heard the higher state level and some national stuff, and then John with the regional. So I'll talk Redmond specific, and I won't have quite as many statistics and things, but I'm going to give you more of a perspective, boots on the ground. It's really hard to get that economic data drilled down to just a city level. But I do have a lot of anecdotal information that I'll talk about as we go through the presentation. And then, of course, we can take questions after. So there we go. Ready focuses on a number of different areas, but the retention, expansion, recruitment is our major focus with companies. We also work on the business environment around workforce, education, childcare, all those other things. As John alluded to, policy, legislature. We have quite a spectrum of different areas that we focus on, in addition to working directly with companies to find them space. So that encompasses part of our strategic plan, which we are right now going through an update with EDCO. When you look at what we do on a day-to-day basis, just a lot of you probably know this already, but there's just a lot of business intelligence that we know from talking to people in the community, things that are available, things that are not available, potential challenges, potential opportunities. And so that information is really valuable as we speak with businesses that are looking to grow or have some event coming up that they need assistance with. We manage the enterprise zone, which is the tax abatement program for personal and real property. So we have probably about 8 new enterprise zone applications or projects this year, maybe more than that since we're only halfway through the year. So that's been more active this year than it has over the last few, which is a good sign of business growth. Pretty much every new traded sector business relocation or expansion is going to come through our office. We work with the city on the land that they own, their Desert Rise over on the east side of Redmond, and also the large lot industrial property on the south end. We've had a recent breakthrough on the large lot industrial property as we've been holding, it's about 750 acres we've been holding out to sell 200 acres initially, and working through some state agencies and determining that now we can begin to sell 50-acre parcels directly, so we don't have to sell 200-acre parcels. And that is, and we have interest there from about 3 parties in 50-acre parcels. I think once we get that going, that's going to really roll. The city is also invested in a master planning process for that property, and that'll be finished later this fall. But they're looking at not only what are the infrastructure needs to support, 6,000 to 9,000 jobs long term out there, but what are the water and sewer needs to serve those businesses, and so and the costs of that. So a lot of progress is being made on that. Very excited about kind of pulling all these different pieces together and activating that land on the south end of Redmond to get some jobs out there. Obviously working with the city on different things. We just made an amendment to the comp plan related to the large lot industrial at City Council this week. Area plans, transportation plans, helping with site selection around the Redmond area, infrastructure to make sure it's served. One of those is power. Right now, power is somewhat constrained, and we're really working with Pacific Power on their blueprint project, which is coming up out of Klamath Falls into Redmond, adding a substation in Redmond to serve the needs of not only industrial but residential. That'll be done probably in 2028. Power is a huge need, not only in Redmond, but around Central Oregon. And so we're continuing to advocate and do everything we can to make sure that we have those resources when companies need them. We also have financing incentives and partners like Business Oregon and the financial institutions we work with, workforce development. So work really closely with Central Oregon Community College and OSU Cascades to create a future workforce, and then childcare expansion. There's a Redmond Childcare Task Force that focuses on creating more slots, and they've been doing a great job over the last several years. So just a broad overview of all the different things.
Steve,
Some of the companies. Yes, Kevin.
there's a question, I think it's from Paul Carter. He was asking if the property you were talking about is specifically south of the Expo Center. I think it was a little earlier in your presentation.
Yes.
Okay.
So it is south of the Expo Center. There's about 200 acres that is between the Expo Center and the property, which is intended to be land swapped and become county property and part of the fairgrounds. So it's not directly, there's sort of a parcel in between. It's if you go onto Deschutes Dial, you can see the large, there's a couple parcels actually identified on there, but 750 acres down there south of the golf course as well. So thanks, Kevin. Anything else?
No, that was the only question in the queue currently. Thanks.
Okay. All right. I'll keep going. So you can see some of the companies. I do need to add Amazon to our list here eventually, but as John said, they're not a done deal yet, and I'll talk about that in a minute. So going through, looking at the last 10 years of done deals, to kind of see the trends, how things slowed down over the last few years. It's starting to pick up again. 2024 had 8 done deals. This work tends to be lumpy, as our former colleague Roger Lee would always say, and you can see that in the numbers. But here in Redmond, we we'll see those hopefully increasing with the number of projects we have, and I'll talk about that in a minute. Those count for in the done deals last year, almost 100 jobs. And again, you're going to see that number grow. And capital investment a little under 35 million last year in our done deals. So while we have fewer, the investment is going up, and part of that is the cost to get projects done. So those capital investment numbers, it just takes more money to get a project done these days with everything that we've been through. And on the left, you'll note a couple companies. I'll call out Western Bus Sales. It's a company out of Clackamas that expanded into Central Oregon that serves school buses. And so they're serving Central and Eastern Oregon with their location here, brand new building, beautiful over on the east side. i3D Manufacturing, which is basically they 3D print metals and alloys. It's a extremely cool process with lasers, and they are a company that was privately owned and is now been invested in by or they brought on investors, I guess I should say, private investment, and so they are now investing a lot more into the process there and are growing significantly. So they're adding a lot of equipment. Ollie's Kitchen has put a production center here in Redmond so they can serve the markets and Newport Market, downtown Bend. So those are a few highlights. So then what's coming? What's on the way to be announced? We've got around 23 projects in the pipeline, and so talk about a few of them. Amazon, which is one of those projects, is building a last mile delivery center that you probably saw announced a few weeks ago. While the official announcement indicated that would bring about 170 jobs, it's really going to be closer to 300. It's one of their larger facilities of that type that they are building. And they'd like to be conservative when they publicly talk about job creation, but in my conversations with them, they will during peak times, have over 300 jobs. So that's pretty significant impact there. Nosler is another project. Nosler is adding about a 80,000 square foot facility here. They've already got the site prepped and infrastructure in the ground there. It's a tilt up building, so it should be, I think they're getting ready to do their pours and the floor and all that. So that will, in the next few months, you'll see that, especially if you're in Redmond looking to the east, that building will be very visible once the walls get up on that, because it's just east of the railroad tracks right along 97 there. And then Hayden Homes is right across from the airport. That's their new headquarters that they are under construction. Baselite Concrete Products is a privately owned company in the Northwest, and they are building a two-phase project. Phase one is a showroom, and phase two will be their manufacturing. They have to import their equipment from Europe, and so that's taking a while. So they're going ahead and building their showroom first, and then they'll move into their manufacturing. All those projects are moving dirt right now. If you drive around the east side of Redmond, there's a lot of construction going on. And it's really fun to see. Bend Teardrop is another one. They make small teardrop trailers. They're moving obviously from Bend into Redmond. I don't know if they'll change their name, but just some really great projects, large and small there. Those represent a little under 3,000 jobs. We have a significant project in there that accounts for a number of those jobs. Capital investment just under 800 million. And then looking at the pipeline and the different sectors. You know, Redmond continues to lead in advanced manufacturing, as well as consumer goods, headquarters, transportation. You know, warehousing and transportation is big in Redmond, because we have space, and we're also the center of Central Oregon, the hub of Central Oregon. And so we're seeing a number of those types of projects, but very nicely dispersed over a number of different sectors. When you look at move versus grow, we have, you know, almost 80% of our projects being expansion or grow projects. As John said, the recruitment has been slower over the last few years, and so that tends to be a smaller piece of our portfolio. When you look at the size of the companies that are in our pipeline, it really varies from you know, the smaller, less than 5, all the way up to more than 100 employees. So very, you know, very well spread out. And then when you look at moving into the flex space and vacancy rates, it's really been very low here in Redmond over the last number of years. This shows, you know, the last 8 quarters or so, and it's been trending up a little bit. But most of the larger spaces, when they are built, are being absorbed. Right now, there's about 100,000 square feet of new flex space being built. Larger projects, so just like 3 projects that are building larger. Some of them are just in planning, so you might not be aware of them yet. One of them is under construction, and that's the type of space that tends to lease faster. We have fairly good inventory when it comes to the 1,200 to 2,500 square foot spaces that are out there. Several projects have been built over the last few years, and we do have inventory there, but we really don't have inventory on those larger flex spaces. So I'm happy to see that we've got some investors that are willing to put some of that, build some of that. So with that, I will wrap it up, and hopefully we have some time for questions.
We still have a few minutes, so thank you again, Steve. Great work going on there in Redmond too. So any questions for the panelists? They're still all here. It's a great time to ask your questions. So I don't have any currently in the queue, but again, you can use the chat feature, the Q&A, or just raise your hand and I can unmute you and you can ask your questions. We'll give everyone just a second in case it takes a second to type. Currently nothing though, so.
Maybe we did such a good job, Kevin, that
I think
there were
you
no
did.
questions.
Oh, here's the first question. So is the reroute of Highway 126 East still happening? I don't know if that's something you guys will have insight into or not.
Yeah, well, I think what they're referring to, the city has a project going on right now called the East Side Bypass, and that is creating from 9th Street at Highway 126 down through the old golf course, and then reconnecting, or actually crossing airport/Veterans, and then coming back into airport right by the solar panel field there that COCC has. So that project is going forward. In the TSP, there is a roundabout at 19th and Airport Way, and the city is really pushing ODOT and the county to plan for an interchange south of Redmond that would be at where McVeigh Avenue would connect with Highway 97 to create an East Side bypass. So that would bring traffic coming into Redmond that's going either to the fairgrounds, the airport, or to the industrial areas off to the east, and then traffic that's going west into the residential areas over to Helmholtz. And part of that strategy is to reduce the number of vehicles just going right down 97, you know, through that south part of Redmond before you get on the parkway that sort of bypasses to the east of the north side of town. And then later on at Maple, where 9th Street kind of tease into it, that would go north and come in somewhere near O'Neill Junction. So that's their long-term goal, is to have sort of this beltway around around Redmond to help alleviate the traffic issues that they're having today already with Highway 97.
Wow. Appreciate that. And then the only other comment I have right now is just saying great news for Central Oregon. So I don't have any other questions in the queue. So I just want to thank the three of you for taking time out of your busy schedules to do this presentation for our real estate community, and to let everyone that's still, oh, I do have someone with Paul, looks like you have a question. I'm going to allow you to talk. So you'll just have to unmute yourself.
Okay,
There you are. Go
thanks,
ahead, Paul.
Kevin. No, Steve mentioned the 3,000 jobs coming to Redmond. What time period are those 3,000 jobs? Obviously, it's going to take some time. Do you have a time frame for those 3,000 jobs coming to Redmond that you mentioned?
Yeah, thanks, Paul. That's a good point. And generally, the projects in our pipeline, they're not going to happen in the next, some of them might happen in the next 2 years, but, we're talking, potentially 5 to 10 years. So when you look at those 3,000 jobs, that's a longer timeline. Most projects that are, even if one project's going to have a significant number of jobs, they're going to ramp up into that over several years. So I would say in the 5+ time frame. John, you probably have a comment on that.
Yeah, so they've told us they're going to make a decision in the next year. In 12 months, they might tell us they're going to make a decision in the next year because their due diligence, you guys know this from a real estate transactional perspective, their due diligence didn't surface a finalized decision yet, and they've got more to do. Hey, I got to figure out what to do with this natural gas line, or when can I get a high pressure line in? So in the move project category, most of our projects take 2 to 7 years to materialize, to come from our pipeline into a done deal. Our grow projects typically occur, so all the grow projects have a 70% probability of occurring. Why? It's a captive audience. When they come and tell us they're a local business, hey, we're going to do this, 70% success rate. Move projects, 20 to 30%. So they don't all happen. We're working with them. They've told us that, yeah, we want to make a decision in the next year, but importantly, we might be on a short list where there are up to 3 and even 5 other sites that they're considering. And so they're not as high a likelihood as a start or go project, because there's in the final decision-making process, we're on a short list of sites they're looking at, and we're still working to try and cultivate that into a done deal. So it's a prospect, it's a project that we refer to as a prospect, but when they give us the short list, we leave them in.
Thanks, John and Steve, for that additional info. Great program. Thank you.
Okay, I don't currently show any other questions in the queue. So again, thank you guys. And I also want to just do a quick plug. If you look at the real estate growth and the growth in Central Oregon, and everyone who is on this call, our livelihoods depend on that growth. You can always trace it back to the work these folks are doing. So if you're not supporting EDCO and you're not supporting Ready, please consider it and become an investor. So with that, also your CE credits will be out no later than Tuesday of next week, hopefully sooner. But if you haven't got them by Tuesday, let us know. Those will get emailed to you. And hopefully, even if you guys have copies of your presentations, I can include that in the email that goes out to you guys. If you have any other questions, let us know. But otherwise, thank you all and have a great day. And again, thank you to our panel for taking time today to do this presentation. Have a great day, everyone.
Thanks.
Bye.